Welcome everybody, good afternoon, and thank you for joining us for 5 Steps to Managing Sales Tax for Retailers. I'm going to kick it over to our presenters, Diana and Greg, in just a moment here, but wanted to cover a couple of housekeeping items as we get started. First off, I did want to make sure everybody knows that today's session is being recorded, and you will receive an email tomorrow with a link to the recording, as well as a copy of the slides and contact information should you have any questions and want to reach out and follow up on anything. We also definitely want to make sure that today's session is as interactive as possible. So we're going to be sharing a lot of great information, but if you have any questions that come up along the way, please feel free to go ahead and drop those into the Q&A area, and we'll make sure that we get them addressed for you before we close out today. We're also going to be having a couple of polls throughout the session, so we'd greatly appreciate your participation in those. All right, so to get us started, I'd love to hand it over to one of our partners from Celerant, Michelle Salerno, for a couple of words. Michelle?
Hey, everybody, and thank you for joining us. We have many clients, existing customers on the call today who know exactly who we are. But for those of you who don't know who we are Celerant, and we offer a complete retail software solution, managing your entire brick and mortar business, point of sale, inventory, and also online. So e-commerce, online marketplace integrations, digital marketing. We really are a one-stop shop for retail. And so a little bit later on in the presentation, Greg will go through some more information about us.
Awesome, thank you. We'll hand it over to Diana now to kick us off. Diana?
Great, thank you. All right, hello everyone. I hope you're doing great today. We are going to talk about the exciting topic of managing sales tax for retailers. This is one of my favorite topics to talk about. So we're going to start out with our agenda that's going to talk about why are we here and give you the 5 steps for managing sales tax for retailers, some helpful tips that can help you get positioned to handle this to limit your exposure. Then Greg's going to share about Celerant, so you can find out some more information about the services that they offer. And then we're going to leave some time for Q&A. So I have a lot of slides to go through, so we're going to get started. So why are we here? We are here because sales and use tax is one of the most confusing parts of the accounting and finance job. It's very difficult to understand. It's constantly changing. And there was an interview that interviewed accounting professionals. 95 respondents of this poll agreed that understanding sales and use tax has gotten increasingly more difficult over the recent years. So it's been a challenge for even accounting professionals to stay up to date on the information. So the goal of this webinar is to give you enough understanding about the basic steps you need to achieve end-to-end sales tax compliance, so you don't have any surprises with exposure. So we've outlined 5 steps to managing sales tax compliance, and these are going to be the major tasks that you want to accomplish when you're looking at having a full end-to-end solution for sales tax. First of all, you want to understand where your business must collect and remit sales tax. Then you need to register to collect and remit that sales tax in those jurisdictions. Calculate the correct sales tax amount on your bills at your point of sale, on your invoices, so that you're sure to get that correct tax from your customer. Track and manage exempt sales. So if you are selling to resellers, then you need to manage those certificates that you would collect from them and remit the sales tax to the tax authority. Pretty simple, right? So let's go through each of these 5 steps in a little more detail to give you some background and some helpful hints on what you need to know. So first of all, know where your business must collect and remit the sales tax. You probably don't need to collect everywhere. The obligation to do so is based on a connection between you and that jurisdiction. That connection is called Nexus. It's referred to connections that are established by either a physical property having some physical presence in that jurisdiction. And over the years, that definition has evolved to other types of nexus, including affiliate nexus and click-through nexus. The states are using these types of nexus. They're basing their determinations for what constitutes nexus and on different things, and they're expanding that definition. And it's changing frequently. So you have to keep track of all of them. There are various rules in every state, so you've got to really keep on top of it. Even inventory stored has become complicated in the marketplace world we live in today. So if you send your products to a third-party fulfiller like Amazon, they may store your goods in a state, and then that may actually create nexus for you. So it's important to understand where all of your goods are, where your inventory is, and where your liability may be. Other nexus creating activities may include affiliate relationships. If your business is that type of business that you have an affiliate, hosted data centers. So that's one that a lot of companies don't think of. Royalties, web advertising, there's more. And it is a difficult part of sales and use tax for people to manage. So some of the nexus creating activities are listed here. I'm not going to read them all, but there are a lot of them here. But some retail specific triggers to look out for are going to be send sales from your retail stores, drop shipments through third-party suppliers, and e-commerce sales through your websites. So those are some of the areas you really want to stay on top of to understand how they could be triggering a nexus for you in specific jurisdictions. So this next slide explains some of those different types of nexus that I mentioned. So we talked about physical presence, and this has always been the standard that you needed to have a physical presence in a jurisdiction before that jurisdiction could require you to collect their tax. Well, that has changed and evolved, but it's important to know that if you have a physical presence, that creates nexus and also will create a liability for you. A lot of companies don't realize that they might have a physical presence if they have service people going into a state, a warehouse, or remote employees. Then there's economic nexus, and we're going to talk a little more about economic nexus, but that's basically the nexus that's created when you conduct enough business in the state to accumulate a certain amount of revenue or a number of transactions in that jurisdiction. Click-through nexus is going to be when the seller meets sales threshold in a state from the activities of an in-state referral agent. So those click-through ads that you often use on your websites could, or you often purchase on websites, could in fact create nexus for you. Affiliate nexus. Now this came about and was very popular in the 90s when barnesandnoble.com and borders.com first started their book sales online. And you could then go into the physical store to return that book. Well, the state of California went after those companies, even though they were separate legal entities. But because there were affiliated, whether it be they would get credit for the books that they returned in the store, in the bricks and mortar, or because of the marketing that they shared, they were deemed to be affiliated. So they then created nexus for the bricks and mortar company. And then there's marketplace nexus. So this has been around. It started, I believe, in 2009. It was originally started in New York. They called it the Amazon laws. So it's trying to go after the marketplace facilitator to be the collector of that sales tax so that the smaller online retailers who are using those marketplaces aren't liable to comply with all the different laws. So it's a way to facilitate the collection of that sales tax by using or going through those marketplaces. And it's important to note that a lot of the states have, in fact, imposed marketplace facilitator laws. So we talked about economic nexus. Back in 2018, there was a US Supreme Court case called South Dakota versus Wayfair. It was the most exciting thing that happened in sales tax since 1992 when Quill Corp was handed down by the US Supreme Court. But basically what this decision stated was that the economic nexus laws that South Dakota had implemented were valid, and they were okay to have those economic thresholds to create that nexus for out-of-state retailers or remote sellers. So this caused an avalanche of laws from all the different states to implement an economic threshold. To date, 43 of the 45 states that have a state sales tax have adopted economic nexus thresholds. And even Alaska, who does not have a state sales tax, but has numerous local sales taxes, many of the locals in Alaska have implemented economic threshold laws. So it's a very important source of income for the states. And with that, we are going to go to our very first poll for this session. Jessica?
All right, awesome. Hopefully everybody can see it now. See the first question. So in approximately how many states does your company do $100,000 or more in gross sales or 200 or more transactions, for instance, invoices annually? And the response options are 0 to 1 states, 2 to 5 states, 6 to 10 states, 11 to 25 states, or 26 to 50 states. Or if you aren't sure or haven't done a state-by-state breakdown on your sales or transactions, we also have an unsure option that can be selected. So I'll give everybody a couple of seconds to jump in here and share a little bit about your sales. And as Diana was just talking about, this relates a lot to the economic nexus concept. So great to just get an understanding of where you're operating. We'll go ahead and close in 5, 4, 3, 2, 1. Okay. All right, so actually with this group, largest percentage, 62% in 0 to 1 states, smaller percentage, 15% in 2 to 5 states, and 23% unsure.
That's great.
Right, thanks for participating. Diana, back to you.
Thank you so much. All right, so the economic thresholds we mentioned vary by state. So if you look here, this will give you an idea of some of the different thresholds that we have in some of the states. But just a note on the poll itself, I heard a statistic today that of our customers who get a Nexus study done, I believe 80% of them identify more states than they thought they had Nexus in. So it's important to note that even if you don't think you have Nexus in other jurisdictions, you may. And even in my previous consulting career, I dealt with a company. It was very challenging. They thought they had Nexus in 12 states. But as we got into looking at their activities, they actually had Nexus in 21 states. And that exposure was very painful to them. Had the states come in at one time to audit them, it would have put them out of business. So they had to do voluntary disclosures and prioritize which states they wanted to do that in. So it's important to really understand where you might have Nexus, because again, you don't want to have that type of exposure that could have a serious impact on the future of your business. So some of these thresholds that I'm going to go over here, we have California and Texas are $500,000 in sales, but that includes exempt sales. Whereas in Connecticut, it's $250,000 in sales and it's 200 transactions, so 200 retail sales. not wholesale sales. Whereas Georgia is only $100,000 in sales or 200 retail sales. So you really need to understand what sales are going to be included in these thresholds. And that has changed over the past couple of years. And then we have our favorite here, Kansas. They don't even have a threshold. They deem that as soon as you're making remote sales into Kansas, you are required to register and collect the tax. So it's interesting to follow this information. So know where your business must collect and remit the taxes. So once you determine this nexus, you're able to start collecting and remitting the taxes once you register with the jurisdiction. So any business activities that could be a nexus trigger, it's important to keep up with that and also keep up with the law changes. So when California first came out with their economic nexus law, its threshold amounts were set, but then they later changed them. So it's important to understand when they changed and what transactions or what revenue would be included in that calculation. All right, that's just the first step done. So then you need to register to collect and remit your sales tax. So you have to register with the states. Some states will require you to register with the Secretary of State, get a business license, and then your sales tax license. You'll have to tell them about your entity and what you're selling. You may need to give them information about your officers, your company officers, or your C-level executives for your business. And this is done to add the personal accountability to your filings and payments. So when registering isn't necessarily enough. So if you have a prior obligation, I was just talking to you about that previous client I had who had physical nexus for prior years, then it's important to understand what your risks are. So you want to do a risk assessment. That's going to identify and quantify any exposure for uncollected and unremitted taxes. If you have physical presence, that is going to bear more weight with the jurisdiction to go look back and require you to go further back to collect those taxes. So based on the risk assessment, you have a couple options. You have options to resolve your past liabilities, do a historical registration, and then pay the register in arrears and then pay up your liability, or you can do what's called the voluntary disclosure program. And we have resources that can assist you with that. And what that does is you have a representative that goes to the state or the jurisdiction on your behalf and anonymously proposes a disclosure of the exposure that you have, and it will typically result in minimizing the penalty abatement and will often include deferred payment plans. So you have, it's a much better way to go into compliance than just starting to register or just starting to collect the tax. If you just start filing the taxes and you really haven't changed your business model, or it's not just an economic presence and you get audited, the states can go back quite a bit. All right, register to collect and remit the sales taxes. So for recommendations, you got to determine where you need to register and when you create that obligation, determine if you need to take any additional steps before registering, such as a voluntary disclosure, and then complete the registration process to become a licensed authorized tax collection and reporting agent in the state. So the solution that we have to offer for that is Avalara licensing. So we do have solutions that can assist you through that whole process. So let's go on to step number 3. So step number 3 is calculating the correct sales tax amount. And this is mind-boggling at times. If you have a lot of locations or a lot of jurisdictions you have to manage, understanding all of the tax rates and the taxability rules is insurmountable. You definitely need a resource to assist you with that process. Even within jurisdictions, there can be nuances to that. And then, of course, if you're in retail, the sales tax holidays are critical. So you always need to be able to facilitate those sales tax holidays, whether it be your point of sale, in-store bricks and mortar, or in e-commerce. So the picture here is showing Commerce City, Colorado. And Colorado is a fun state if you're located in Colorado or do business in the state. Here you see this location, and they are at 7501 Locust Street. You can see their tax rate is 4.75%. For the same computer in the location of 7495 Locust Street, their rate is 9.25. Now, personally, I'd probably be going to have my stuff shipped to my buddy's place where the rate's lower, but we won't go there today. So that just tells you if you do not have accurate jurisdiction identification, it can be a huge customer service burden. You want your customer experience to go smoothly. You don't want them to have to worry about trying to figure out, how do I get this merchant to get my tax correctly because I know they're charging me the wrong tax. And then there's product taxability. So we have a couple of fun items here that we've identified. So formal wear in New York, if you purchase it, it's going to be exempt, but if you rent it, it's going to be taxable. Donuts in Texas. So I personally never sit down and immediately eat 5 donuts in one sitting, but I guess Texas deems 5 donuts purchased as food for immediate consumption and therefore taxable, whereas over 5, you bring it home. So that's an interesting spin on the donuts. Then, of course, we have our footwear in Connecticut. So typically clothing items under $100 are going to be exempt. So shoes are exempt, but boots, fishing, mountain climbing, paddock, riding, ski, firefighter boots are taxable, which is interesting. And if you love the high-end footwear or high-end clothing, they of over $1,000 per item, they will get you at the sales tax luxury rate, which is 1.4% higher than the standard rate in Connecticut. So there's a lot of nuance to items being sold in these different states. A lot related to food, but clothing also has a lot of nuances. You have the sales tax holidays for hurricane preparedness. You have the Second Amendment sales tax holidays. So there's all kinds of rules. So you can see here that we support 1,800 different rules in our standard sales and use tax solution. Retail specific challenges for calculating the sales tax reimbursement amount. So this is something that comes up a lot. So how do you handle store coupons and price reductions? So if they're offered directly by the retailer and not reimbursed by the manufacturer, typically these will reduce the selling price, whereas manufacturer coupons or promotions which reimburse the retailer generally do not reduce the amount of the sales tax or the amount subject to the sales tax. Then you have the ever popular BOGOs, where you buy one, get one free, or buy one, get one half off. So in some states, the second item provided free may be subject to use tax on the retailer, unless the retailer sells each of the items at a 50% discount. So there's a lot of things you have to think about in the way you propose these common practices in retail. Then there's the 2 for the price of 1, because the word free is not included in the promotion. These sales are often treated as one sale involving both products, and the sales tax would be typically measured by the single price paid for both. And then you have rebates. So rebates, when products are sold with a rebate, the rebate is directly to the customer by the manufacturer. So the sales tax base is normally not affected. And then there's bundled transactions. So if you sell taxable goods and non-taxable goods, I always use the example of a gift basket with food, exempt food, and a candle, tangible personal property, then the whole thing may be taxable just because you have that candle in that basket. So there's a lot of considerations you need to take into your thought process. There's shipping and handling. Those charges are going to be different from state to state. And if you just charge for freight, that may be exempt. If you charge for shipping and handling, typically there's going to be a tax on that. So there are lots of fun things and lots of fun topics here when you're dealing with retail specifically. And again, calculating the correct sales tax amount. So it's important for recommended next steps to become familiar with the variables that make up an accurate tax rate. So we talked about that quite a bit, and have a solution that can quickly and easily charge that correct tax rate. And then consider integrating all your systems. So it's important to make sure you get the ERP, the e-commerce, the point of sale, all of that information to calculate that same tax so you have the tax consistent across your sales channels. So the solution that we recommend for that is Avalara AvaTax, which has all of that data and all those rules built into it. So we're up to step 4, and I am running out of time, but we want to get through these topics. So track and manage your exempt sales. So if you are selling to wholesalers, or if you are a wholesaler selling to the retailer, they're going to be purchasing their goods from you exempt typically. So when you do that, you need to collect an exemption certificate. So no matter what, when a customer or when a company is making sales that are exempt for resale, for government, for nonprofit, for schools, for, I'm trying to think of any of the others, there's lots of reasons, then you should have a certificate to support that. So you need to document that sale is exempt and why it's exempt, so that under audit, you have that information available to you. A lot of times, companies who are wholesalers will not even collect certificates. All my sales are wholesale sales, they're exempt. But when you are under audit, if you don't have that documentation, then it's going to be difficult to justify that exemption. And there are multiple ways that exemption can be thrown out or certificate can be thrown out. If it's inaccurate, if the name on the certificate does not match the name on the invoice or the name of the customer, then it will be thrown out. I used to work for a company managed 300,000 exemption certificates. The auditor would come in and throw out certificates where that name did not match exactly. So we worked with a lot of franchises that may be doing DBAs. So the corporate name was on the certificate, but the DBA was on the invoice. So it was challenging. So there is a lot to making sure you get that accurate certificate in place and you have it for the state. Now, some states vary in their effective period. So if you are obtaining resale certificates from your customers in Florida, those resale certificates expire every year at the end of the year. So managing all of that is a challenge for companies that are making exempt sales. So track and manage your exempt sales. Avalara has their cert capture solution. And what that does, it manages the whole life cycle of exemption certificate management. So you can have a link on your shopping cart checkout where the customer can say, I'm exempt. And they'll click on that link and it brings them to a portal where they can complete an exemption certificate for that claimed exemption for that state and sign it. So it really helps to improve that accuracy and to minimize exposure when you're under audit, because it's important to remember a sales tax is a pass-through tax. You're collecting it from your customer. So if you get it right, it's simply the cost of facilitating that you have to worry about. But if you get it wrong, then you have to pay that tax plus the penalties and interest on top of that. That's a direct hit to the bottom line, and it's a painful awakening for a lot of companies. All right, we're up to our last step. Remit sales tax to the tax authority. Should be simple, right? So once you have collected that sales tax, you need to submit the sales tax return of all the data across all your sales channels to that pertinent jurisdiction. So you have to aggregate all your e-commerce sales, all of your point of sale sales, any other channels, sales channels that you might have, and your marketplace sales, so that you can provide that information to the jurisdiction. If you file on time, some states give you a discount. If you don't file on time, then you're going to have to pay a penalty. So you should have a filing calendar, and managing the filing calendar, some of the steps in there is determining how you're filing, whether it's e-file or EDI or paper, and then the payment process, the filing deadlines, the any outlet reporting. So if you have multiple bricks and mortar stores, then some states will require you to report each of those outlets separately. And then local filing for home rule states like Colorado, where a number of the local jurisdictions, you have to file a separate return directly with that jurisdiction. Alabama, Louisiana, there are a number of states, just a handful that require that local home rule filing. And then we talked about aggregating all of that information across all your systems. And then there's tax notices. The states send out tax notices frequently. Sometimes people call them nuisance notices. So the state may say, we didn't receive your filing for this period, or we didn't match up the payment for this period. So you have to spend time digging into those to avoid future audits. And then the time that's spent on preparing these returns versus the other high value projects that your resources may be able to dedicate themselves to, a lot of times it's not worth it. So it's important to find a solution that can take that headache away, has people that do this all the time, and really streamlines the process. So for that, we have our Avalara solution for Avalara returns, where you can outsource that process to us. We'll take care of that filing, we'll take care of the notices, and we'll take care of that remittance for you. All right, here's our next poll.
All right, here we go. Hopefully everybody can see it now. Second and final question. How much urgency do you feel to implement an automated sales and use tax compliance solution? Option 1, I feel the pain, I need it now. Option 2, it's on my to-do list, but I have other priorities that are more pressing. Option 3, it isn't on my radar screen. Or option 4, I'm already a tax automation pro. So I know Diana shared a lot of great info. Hopefully everybody's learned at least a little something new today. But just always interesting to see kind of where you are in the process. And we'll go ahead and close in 5, 4, 3, 2, 1. All right, and so 70% of the audience, it's on my to-do list, but I have other priorities that are more pressing. 20% not on their radar screen, at least not quite yet, and 10% already tax automation pro. Awesome.
Ooh,
Thank you.
that's great. All right. So here's again are the 5 steps. I'm not going to go over them again. I want to give Greg some time here. This is the tax compliance suite. So all of those steps and all the solutions we talked about are all built into here. So this is the Avatax tax calculation engine. So the ERP, eCommerce, POS, all your systems can feed into Avatax to calculate that tax and return it to your systems. We do all the research. So we research all of that pertinent information that's going to ensure you get accurate information for your tax returns. We also have Cert Capture that's fully integrated with Avatax, and we'll also get a feed from your systems to set up those exempt customers. You can then request certificates from your customers and they can complete them in the easy portal. And then last but not least is the returns. So we have the managed filing returns where we will take all the information and we will file those returns to the jurisdictions and we will do the remittance for you. So this is a quote from Geiger's, and they were saying that when they got into e-commerce, they were fortunate that Celerant had the partnership with Avalara. The connection was easy and seamless. So that just gives you an idea that if it's on your back burner, it may not be as bad as you think it is to get into compliance and make sure that you don't have any skeletons in the closet. All right, so one thing to be aware of is that there are free sales tax services for qualifying businesses. So in up to 24 states, you may qualify to be a volunteer for the streamlined sales tax. And that would include free registrations, free tax calculations, free returns preparation and filing, audit assistance and response, uniform definitions and rules, and one registration and identification. So we are a certified service provider for the SST. So the states pay us to provide that service to qualifying companies. So if you think that you may have some economic nexus in some of those states, or if you just want to do this as a service to your customers, then certainly talk to us about becoming an SST filer. And with that, I am going to hand it over to Greg, and hopefully I didn't take too much of your time, Greg.
Well, hello, everybody. Are you able to see me? Okay, great. I'm Greg Cheyenne from Celerant Sales Department. Some of you might know me that are on the call. I'm going to kind of speak to the people. We have a mix of people here of current customers and prospective customers. So we're going to give the prospective customers some little bit of a taste of who we are to let them know what we're doing. But before I go in and talk about that, I just want to tell you that I've got a number of customers that are running Avalara and have integrated in, and they find it invaluable. You know, especially if they're doing e-commerce in multiple states. It's very difficult to track as your business starts growing, and they have a fantastic service, and it's really worth looking into. So just to tell you a little bit about who Celerant is, we've been in business over 21 years in the retail industry, have been leaders in a lot of technology through that 21 years. We have 4 offices nationwide. We're headquartered in New York City. We have another large office in California and an office in Georgia and Texas. So we have coverage across the United States. We have more than 1,500 clients across different verticals where we've done some very specific things for vertical industries. And we're really a source that's going to take care of everything for you. From the time that you go in, the implementation, all your support needs for in-store, online, multiple markets. And one of the things that we also like to tout is that we've been considered the #1 software provider from RIS Magazine. They do something called a leaderboard, where every year they go out and do in-depth interviews with 800, 1,200 different retailers, and they do in-depth studies about the systems that they run in over 50 categories, and then they rank those software companies. Last year we were ranked #1. We've always been at the top of the list since for over 10 years. And it's a nice thing to get those accolades. If you could go to the next slide, possibly. Oh, great. So we have a system that's very, very easy for you to manage, both your brick and mortar business and your e-commerce business. In the brick and mortar, we have 2 versions of the software that we sell and develop. One's more of a standard product, and then we have an enterprise product for larger customers or people that have very sophisticated needs within a small business. Some of the highlights of some of the things that we do is that we have an always-on capability, so that if your main server, which is usually hosted, goes down, it can keep your stores up and running. And when the system goes back up, we'll resync the data. We have mobile point of sale capabilities. So you can have both stationary stations and mobile point of sales where you can take it out onto the floor or off site and sell, which has all the items that you would need to sell. We're contactless with payments, which is big in this day. We have a complete system that handles every aspect of your business. So from the time that you purchase to the time that you sell it, and everything in between is handled by our system. We have fantastic customer relationship management. We have special pricing that we can give your customers. We have a robust promotions module that's very sophisticated. And we also deal with loyalty rewards. Again, we completely take care of the inventory, from the transfers, from the adjustments, everything through. We also have a feature that you can add in where we can import items into the system out of catalogs that we've made relationships with, different manufacturers and different distributors. So you're pulling in accurate information, the barcodes, the pricing, the descriptions into the system. And we also, in some cases, can send EDI purchase orders out, get advanced ship notices back. We can do some automatic ordering to those vendors and distributors that we're dealing with. And in some cases, we can feed that data to your e-commerce site with content, depending on the industry. We also handle memberships and recurring billing within the system. We have classes and course scheduling for those people that have things like that in their business. We handle rentals. We have a work order system for repairs that's pretty sophisticated. And we can do buy, trade, and consignment. Our reporting is phenomenal as far as we give you different categories of reporting where you can design your reports within the system at any level and detail level, with over 100 different merchandising criteria to be able to pull information out of the system. And those can be run now, scheduled, or put on a repeating schedule where it can print it, send it to a file, or email you the report. So if you could go to the next slide, please. We handle e-commerce, and it is part of our system. It's not a third party that we're importing and exporting data back and forth. It's part of the database in the Cumulus group. It is passing information on a time basis. In the Stratus area, it's live data. So it's working off of the exact same database that your stores are. So we will take on everything as far as producing your e-commerce site. We'll work with you to design for the design. We have cross-channel pricing. We can do promotions. We can use gift cards in both the online and in store. We could do online vendor feeds from your vendors for available inventory and use that as available to sell. And we can do some drop shipping with some of those vendors and distributors. One of the things that today is very important is that we have a curbside pickup app, which links into your e-commerce system, which would feed a curbside pickup app where when they've arrived at your door, it will let you know, both by changing it in the app and also texting somebody in your store that they're outside to pick up their merchandise. We integrate to other marketplaces like Amazon, Walmart, eBay. Also within the system, we have email marketing and digital marketing, where you can set up campaigns based off segmented data in your database for both the e-commerce and in store. So you have your data there from your system where you can set up a campaign, geographic area, types of things people buy, dollars spent. There's about 50 data points that you can use. And you can set those up as automated campaigns or execute them yourself. We'll also help you online. Internally, we have people that can help you with SEO. So you're not going to a third party. We're familiar with your site. We're familiar with your business. And we can help you improve your SEO. Go to the next slide. You can watch our videos on YouTube, and we have a number of them for different subjects within the system and different things that we can accomplish. You can find us on Celerant.com, where there's a lot of information for you. And we also put out a blog that gives you timely information on a regular basis. And if you'd like to find out some more information about our program, or we'd love to talk to you about it, or if you'd like some more information on how you implement and how things work for Avalara and what it would take to get you set up and what you have to do within the system, we'd be happy to talk to you and walk you through how everything works. Thank you.
Awesome. Thanks, Greg. Thanks, everybody, for holding on. We do have a couple of questions that have come in. And Diana, I think they'll, so far, are primarily based to you. So first question, when a customer's reseller permit expires and you have received the updated permit, do you have to keep the older permits to show you had one on file at the time of past purchases?
That is a great question. And yes, you do for the audit period or the statutory period. So there's a limitation of statute that varies by state to state and will cover the period that a state's allowed to audit you for. So it's important to make sure that you have certificates to cover those previous purchases until that statute has passed and you no longer have to worry about being audited for that period.
Perfect. Thank you. Next question. We have recently been ramping up our e-commerce business. We are based in the state of Colorado. How does Avalara Returns handle the individual filings to home rule cities? Do we have to register in every city we sell to?
So the laws vary, but we can help you determine which cities you need to register in. and then assist you with that registration and identify the locally administered jurisdictions that you need to file directly with.
Perfect, thank you. Next question, are marketplace sales included in economic nexus threshold calculations?
It depends, but yes, they can be included, and it's important to understand how those marketplace sales are calculated, who owns the customer, but certainly it's revenue that you generate in a particular jurisdiction, so they can be included in your sales for an economic threshold. Again, the rules vary by state, so it's important to get a professional to assist you, and we can assist you with that exposure analysis or that Nexus study.
Perfect, thanks. And just a reminder, if you do have any other questions, you can drop them into the Q&A area and we'll get them answered for you. Next question, when you hit an economic threshold, are you automatically registered in that state?
Unfortunately, you're not. So you have to take that action to go and proactively register with that jurisdiction. And if you don't, and you don't start collecting the taxes, then the states are going to start enforcing these economic nexuses, or have been enforcing these new rules. So it's important to make sure that you're covered so you don't get caught with either a jeopardy assessment or under audit that you have under collected the taxes.
Perfect. All right. Well, that is all of the questions that we have gotten in. Oh, one more question. So the last question came in the chat. If we are a current Celerant client and we're interested in Avalara services, who do we contact? So maybe if you want to throw up the next slide, actually, Diana,
Sure
that would be
thing.
helpful. We've got contact information for both the Avalara and the Celerant teams. So there we go. And both Tyler and Barry's email addresses, contact information are going to be included in the email that you'll get tomorrow. So if you don't get a chance to kind of grab it here, but the recording, the slides, and contact information will all be sent out automatically via Zoom tomorrow. So you should be set on that.
We also, Jessica, just to add, we also have a webpage that Celerant clients or anyone can visit at celerant.com/Avalara. And there's a lot of information on that webpage about, of course, Celeron, about Avalara. We've been partnered for a really long time, so there's a lot of info there. And there's a form on the page where whether you're a Celerant client or a potential client, you can fill out the form and that'll come straight through to Barry as well. And then Barry will follow up directly with you.
Perfect. Thanks, Michelle.
Sure.
It looks like that is all of the questions. So just want to thank everybody for joining us today and hanging out with us and learning a little bit about sales tax and Celerant. And to Greg and Michelle from the Celerant team, as Michelle mentioned earlier, we've been partners for a long time and they are great partners. So we're lucky to have them and lucky to be have all of you with us this afternoon. And thanks again to Diana and for sharing all of her great knowledge with us. I hope everybody has a great rest of your day. Take care.
Take care.
Thank you.